Today we'll continue our in-depth discussion of the Fibonacci levels in trading. Stay right there. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. Today we'll continue our in-depth about Fibonacci. Last week we talked about the origins of the Fibonacci trading levels. This time we'll look at when and how to use the Fibo levels to enhance your trading. Fibonacci levels are valuable in identifying potential support and resistance levels. When using the tool for trading purposes, the key is to know when to use the Fibonacci tools. The best environment is trending markets. Fibonacci levels work best in trending markets and do not provide any benefit in ranges or consolidations. Plain and simple, the fibs have no value in zones where the price is consolidating, correcting, ranging, and moving sideways. Why? Traders tend to ignore these levels because currencies act and react to different tools and items such as tops and bottoms. If the currency, however, is indeed trending, or if the fib is used on higher time frames, then the tool is an asset because it gives you a great indication of where the market may turn back in the direction of the trend. Traders can use fibs for their trading decisions and entry choices, target and stop loss placements solely based on this tool. But traders are also able to use the Fibonacci numbers in a different way. Fibonacci levels can also filter out trade ideas. No trader would want to take a trade in front of a big fib level, so that could just totally invalidate their trade. Fibs can also be used as a trigger instead of an exact entry. A trader could have a certain fib level in mind which they would like to trade. A direct entry order at the fib level would be one way of tackling this setup. But traders can also view the fib level as a trigger and enter a trade later on after other conditions have been met, such as a candlestick pattern, breakout, or any other confirmation that price is respecting the fib level. Placement of the fib retracement tool is important. For normal usage, the tool should be placed left to right, although experienced traders will occasionally have reason to use it the opposite way. In any case, Forex traders will want to place the fib from the bottom to the top in an uptrend and from the top to the bottom in a downtrend. This move from top to bottom can also be called swing high and swing low. If you're a beginner to the Fibonacci tool, you'll find it important to place the tool properly. More advanced traders may want to place multiple Fibos on interim pullbacks in a trend to find points of confluence, but that's a more advanced technique that we'll cover another day. You want to use tops and bottoms on your time frame. Use natural tops and bottoms for swings and legs to place your fib. You can use a fractal tool that will help you in identifying the tops and the bottoms. You also might want to add the awesome oscillator. Then you can check when the zero line has been crossed and wait for a retrace back to that zero line. You now have confirmation that the move is one leg or swing high, swing low. Ideally, a new fib should not be placed on a new swing high, swing low unless the target has been hit. We'll talk about targets a little later in this series. The reason is that only when targets have been hit is the currency pair in a trend. If the price is bouncing between the top and bottom, in other words, if it's in a range or consolidation, the Fibonacci retracements are typically ineffective. The most important target to hit is the minus 0.618 or the minus 0.272 in the case of the 78.6% and 88.6% Fibonacci retracement levels. And I believe this is a good place to stop for this episode. Next Wednesday, we'll talk about how to use your trading platform's Fibonacci tools to find these levels. Come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash that like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.